This is episode 1 of a brand new series we're starting, The Path We Took to Tripling the S&P 500. Hi everybody, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that in this video series is by showing you step by step what I personally did in 2017 to triple the returns of the S&P 500. So tripling the market isn't easy. I'm somebody that has a separate full-time job, a family, a wife, a child, and I really don't have a whole lot of time to sit there and analyze markets the way that I used to. Back before I had all these family and household obligations, I would go through the newspaper, read all the articles that are related to the stock market, find the stocks that I was interested in that had outstanding earnings and sales, and then I would screen for different stocks too, so I would have multiple lists. I actually did a whole blog post on what my routine used to look like. I'll link it somewhere up here just so that way you could see. And this routine would take me several hours every weekend of going through everything, finding those stocks, looking for the setups, and then building a plan for all that. That was great when I was single, before I was married, and definitely before I had my daughter. She's 2.5. I love her very much. She's awesome. But anyway, it's very difficult now for me to find any time really to go and do that level of work, let alone doing something that would produce a return of tripling the S&P 500. So what I'm doing right now, the way that I was able to do that was simply by following the model portfolio that Adam Sarhan puts out in the advanced stock reports. So this model portfolio, the only thing that it does, or what it really does, is it shows you exactly where to enter, where to exit, and based on that, it's giving you the percentage that you need to risk, and you could then figure out what types of position size you should do on every single trade. So after knowing Adam for several years, we built up trust, and so I decided to create a separate account that would just follow this model portfolio, trade for trade for trade. And in doing that, all I have to do is just look at the report on the weekend, take the orders that are there, put them into my brokerage account, and then that's basically it. Right, like there's a pretty long report. It's probably about 15 or 20 pages if you wanted to sit there and comb through the entire thing. There's additional setups for that, but for the sake of what I was trying to do, I just wanted to follow this model portfolio trade for trade because I knew that it had very good performance. So going in and following the portfolio trade for trade, 5 minutes once a week, is all it took to go in and enter the orders, raise the stops, and that's it. The management of it was done. And so in doing that too, and here's another thing that's really solid about doing this. What it allowed me to do was to also learn how to better manage a position, looking at it from the intermediate term perspective. I've been trading for a very long time. At this point, probably over 10 years. Right? Well, when did I start trading? I want to say that I started trading or participating in the markets right out of high school, but I started to get serious about the markets probably about 10 years ago. And the part that I was able to do pretty well on my own consistently was doing more of a swing trading methodology, where I'm still following the basic canceling methodology. I'm going for high growth stocks. I'm looking for stocks that are setting up in base patterns, consolidating, breaking out. I still do this in a separate account, but holding on and going for those longer term moves is something that I always struggled with, because when a stock would pull back, that's when all the psychology would start to get to me. And I would just have a very difficult time holding through the pullback, and I would be the guy that would routinely sell at the bottom and then watch the stock continue to take off, and I would be super frustrated by that. So for a very long time, I gave up on intermediate term trading, and I was only trying to do my own swing trading methodology. And then Adam came along with this model portfolio, and it was intermediate term, and so following that intermediate term portfolio allowed me to better understand what it takes to hold through, and how to hold, and when to hold, and to be guided for all that. So I really want to share with you the path that this took me throughout all of 2017, so that way you too could see what it takes to have a triple-digit return in your portfolio, and to have what it takes to triple the S&P 500 for all of 2017. It's not easy. It sounds easy when you're in such a strong bull market. It's not. So sit back. I want to take you through this trade for trade, and every single week we'll be going through one trade from the model portfolio, both the winners and the losers, so that way you could see how the trade was managed for the duration and throughout 2017. So let's go into ChartYourTrade and find last year's report, the first week of January, and see what the model portfolio was doing back then. All right, so here's ChartYourTrade.com, great picture right there. And let's go to the advanced stock reports. Okay, so everything is archived right there on ChartYourTrade, so you have full access to everything if you do become a member. Okay, so here is the archived report, and let's open this up. First report of 2017, and this is what it looked like back then. Right, so we're gonna go through this one trade at a time for this video series. So the first one that we'll take a look at is gonna be MU, and how we traded it, and what it ended up doing. So here was trade number 1 of 2017. We're looking at Micron Technology. The ticker symbol is MU, and we originally bought it, right? So the model portfolio bought it back in November of 2016. It ended up exiting on January 12th of 2017. So that's why it's being included in 2017. So it bought back in November, and this is the pattern that it was looking at. It was looking at this, which is basically a flat base, and it was buying on this advanced entry point over here. So there's a few things that it's looking at when it's trying to break out. It's looking at this base, and it's looking at, let's just pull up the weekly chart and see what it was doing at the time. So at the time, it had bottomed, started an uptrend, and it started to consolidate. And so while it was consolidating, it does a couple of things. It allows this longer term 10-week moving average to catch up to where price is. So you could see how it's getting extended from that 10-week line, and then it consolidates sideways, and it allows it to catch up. So that's something that allows the support levels to catch up and makes for a better entry point, because if it starts to roll over and starts trending below that 10-week line, we basically want nothing to do with it at that point on an intermediate term level, which is what this portfolio does. So to go back to the daily chart, it was consolidating, and on the daily chart, that's where Adam likes to find the advanced entry points, and I completely agree with that. And it's how I do it too, also for my shorter term swing trading accounts. So what he did was he got in right here, and we have this bigger consolidation. There's a smaller consolidation within it, and there are really two levels of resistance within the space. There's this one over here, and then there's this one over here. So you have those two red lines. Then there's also this descending trend line. So when this stock or any other stock breaks out, we want to see multiple things going on to help confirm that breakout. When you have a move above both a trend line and a resistance level, then that's helped to confirm the breakout. There's going to be more eyeballs on that level, and it has a better probability of working out. You'll also want to make sure that support is relatively nearby. So support was building in this base, then it was building over here, then it was building over there. And so Adam used this level over here as the stop price. So 1696 was the entry point. The advanced entry point was right there at $17.98. So how do we even calculate how many shares we should buy, right? So that's where ChartYourTrade helps come in, and we have this position size calculator. And I use this position size calculator all the time on all of my trades. And let's just say that we have a $100,000 account, right? To keep the numbers nice and round. This also works if you have a $10,000 account, a $1,000 account, or a $1 million account. So let's say that we have $100,000, right? And we're only going to risk 1% of our trading capital on this trade and on every single trade, so that way we're keeping our risk consistent. All right, so the first thing that we're looking at is 1798 is going to be our entry point, so let's get that. 1798, and then our exit is going to be at 1696. We compute, and we find out that we were able to buy 980 shares. Our position size is going to be 17,627, and we're risking $1.02 on every single share. We're risking 5.67%, so the difference between our entry point and our exit point is 5.67%, and we're risking $1,000 on this one trade. So as the trade progresses, we are raising our stops, and we're basically following the 50-day moving average at first. And the beauty of this model portfolio that and how it's being managed is that it's following, for the most part, Adam is following a 3 strikes rule. So he wants to progressively raise the stop and to a level where if you get stopped out, 3 strikes are happening. It's breaking a trend line, it's breaking support, and it's also breaking a moving average. So on this stock here, he ended up raising the stop up to this level here, and that's why he ended up getting model portfolio was stopped out right there. At this point back in January, if we go back and look at the S&P 500 over the same period, it was starting to get a little squirrely, and we were expecting a deeper pullback. So So if the S&P 500 pulled back to the 50-day moving average, Adam was attempting to protect the position, because at this point, well, we had a pretty solid gain. Well, what kind of a gain did we have? 22.38%, give or take, on that one trade. All right, so let's raise the stop up and protect the position, because if we kept the stop down at the 50-day moving average, then we'd be giving up about half the gain from between that point and down here. So risk management comes into play too, because the way that we're ultimately going to win in the stock market isn't just by picking the best stocks and riding them for as long as we can, but also by compounding our gains. And so that's why when we do have a winner, well, we definitely want to let that winner run, but we also want to lock in gains and not give up too much of our gain as it's making its move higher. So that's how the stop ended up getting moved up to that level there. And we were stopped out. And from November 14th through January the 12th, we were able to lock in a 22% gain on that one trade. Right? So MU ended up going much higher, and let's zoom out. Right? MU did not come back into the model portfolio. So personally, for me, looking at that, I'm a little disappointed, right? But there were plenty of other things that did come onto the model portfolio that allowed us to achieve that triple digit winner, right? And that's part of the psychology of trading. So if we're just focused on this one stock and we sell and we see it start to move up without us, that causes a lot of psychological heartache, and it's not easy to sit there with the stock when we're fully in control of the portfolio and then watching it go off. And that's something that I used to struggle with so much when I was just trading on my own and trying to make everything work, right? So both my swing trading strategy, my intermediate term strategy, my longer term strategies, and it's when you're looking at something like this and it runs up, it is difficult to see it run up without you. You start to doubt yourself. You start to think that, man, I really botched this, because look at all that upside that I left on the table. But you can't think that way. If you start to think that way, that's when you start to make poor decisions. Micron Technology could have done anything after selling. It broke support. That's the reason why you sell. And it could have rolled over from that point. You just don't know. You only are able to trade with the information at the time that's right in front of you. You can't predict the future. So there's no point in going back and seeing, well, I could have done this, I should have done that. Well, you didn't. You need to be satisfied with what you did on that trade and then move on. And then when you go back and you do your post-analysis, you're doing your post-analysis and you're thinking about, well, what could I have done better, and given everything that I knew at the time. And if you were following your rules and if your plan was solid and could also be applied to other trades across the board, because the way that you're managing this one, you need to be consistent. And so if your plans are inconsistent, that's also going to force you to have these kind of poor performance. You really need to be consistent, and you can't look in the rearview mirror. Looking in the rearview mirror is one of those things that's going to end up killing your account. But anyway, this is the first trade that we locked down for 2017. 22% gains, not too shabby. Very short time period, so in about 2 months, able to make 22%, and that was the first trade of the year. And so we will look at more trades in the next video. If you want to test out this model portfolio and the advanced stock reports for yourself, we're actually running a special deal right now. You could test it out for 3 months. 3 months. Normally this goes for $97 a month. You could test it out for 3 months for only $27, right? So we are giving you about a $250 discount off of this. So I will link it somewhere over here, and you're going to want to use coupon code 3 for 27, and we'll put that in big bold letters and put that all over the video as well. So sign up, check it out, you won't regret it, and with testing it out for 3 months, you will really get to see just how well this is going to perform for you. I really hope that you found that helpful. If you did, leave a comment below. Let me know what specifically you liked about the video. If you didn't find it helpful, if you wish that I would have covered something else, leave that down there too, so that way I can help make the next video even better. And if you do have any questions about anything at all, please leave that down below too, and I will personally respond to everybody. Thanks so much for watching. If you like the video, click that thumbs up. It really helps us out a lot. Also, make sure that you subscribe to the channel so that way you're going to get every single update that we put out. Thanks again for watching, and I'll see you again in the next video. Take care. Have a great day.